Hey guys, and welcome to this video. So in this week's video I want to talk about market opportunities in the month of September. What is the breakdown? What do I normally look at, and how do I pay attention to what to trade, what not to trade, and what just to prepare myself in advance just in case the opportunity comes. So I want to give you that breakdown, and this video is proudly brought to you by Paperstone. Cool. So let's get straight into it. I'll show you my sort of thought process, but I'll also get deeper into this in our Thursday webinar. So today I'll just show you a rough overlook. I like getting deeper into the Thursday webinar because a lot of you tend to take your time to come for those webinars, and I believe it's only right for me to get deeper for the people who join those ones. So the link is below, the Zoom link, so be sure to get that Zoom link and prepare in advance to come for the Wednesday webinar. Update. I normally trade indices, so if you're here for currencies, I'll do a little bit of currency analysis if you ask me on Thursday. I'm looking forward to that session pretty much so that you can ask me questions and I can dive deep into others. I've not looked at currencies in a while, but that doesn't mean I don't look at them. I used to trade them for over 5 years before I did away with them, and these days I focus mainly on indices and commodities, with a major focus on gold as a commodity. And US oil, I just tend to look at it just to understand it. Hopefully, maybe in the future, I might add it because it tends to be quite directional. But at the same time, I tend to be very disciplined to trade what I know, what I've backtested, and what I have data on. Not just randomly buying and selling here and there, helter-skelter, and what have you. So far, no trade this month. I want to talk about my thought process and what I look at. First things first. You have to prepare ahead. What do you have in the month of September? You always have to look at data releases because it tends to affect markets. Now, I tend to use Forex Factory. Remember, I taught you guys how to filter, and I'll just do it one more time. Not even one more time, I'll keep doing it in future, just in case for those new traders and who have just joined us recently. So I tend to filter. I don't want to look at everything. If you come here, you'll be so confused what to look at, what to pay attention to. You don't want to look at everything. I tend to filter and just keep high impact. So this is expected impact. How does it have an impact in the markets? So I tend to remove this one, the orange one, because it is medium impact, and this one, the yellow one, is low impact market. I tend to keep the high impact, which is the red one, and I keep the gray one, which is basically giving me holidays and an economic data. It's important to know that because holidays, if the US, for example, recently they had the labor holiday, when they have such holidays, markets tend to not have volume. So during those times, it's important for me because my strategy needs me also to look for volume dependable markets, especially when I'm looking for entries in the market. So when there's no volume, even if my system is really building up and showing me an entry, I don't pay a lot of attention to, because the next day when the volume comes back in, it might spike a lot in the markets. So I tend to wait for that markets to come, those volume people, the volume sessions to come when the markets are active with those traders. So in order for me to trade, we've partnered with Paperstone, one of the world's leading forex brokers, my personal best, to bring you an exclusive opportunity. And trust us, you won't want to miss out on this. All you need to do is find your Paperstone account, and boom, you're all in. Why is this huge? Because you get to learn while you earn. Trade the real money and get real experience. And also you get lifetime access. Once you're in, you're in. Next week, there's a video I've done that is going to talk about macroeconomic shifts and all that in indices. And I've talked deeply about how post-holidays, post-summer break, why September is a highly volatile market. So wait for that video. I've explained deeply what it's all about. So then I apply filter, Okay, so you just apply filter. You can see it normally breaks it down. Now you can look at the market on a weekly basis. You can look at it also in a monthly basis. You can see here, you can come and say this month. Okay, so the month of September, let it load. So you can look at it on a monthly basis. So it will just show you. You can see here now it's marked from start of September to 30th of September. So you can just have it. I prefer doing this. Long time I used to do it on a weekly basis, but I tend to prepare better when I'm looking at markets on a monthly basis. So you can see here, just to show you an example, we had a whole bank holiday. It was Labor Day in America. So if you have any market you want to look at, you can always come here, click on this just to understand what is it all about. You can see this was a Labor Day bank holiday. So you tend to have very little volatility on those days, okay, and little volume in the market. So it's best for you to just stay out of the markets during those times if you don't have any position running, okay. So you can see this was last week. The last week already came to an end. We had an NFP, non-farm payrolls. I saw some people on social media, those people who take trades and they start staring there, recording themselves, waiting to celebrate. That's pure betting. That's gambling. If you've seen those people, you know who I'm talking about. Don't do those things, okay. I'm giving you solid advice from experience, okay. So NFP came out last week. You can see it came out way worse than expected. You can see the graph here, okay. Markets came way worse. People were expecting it to have 75,000 change, but markets had much less. My internet is quite slow, so there's a graph here. You can normally see how markets are going up, going down, and non-farm payrolls came out quite unexpectedly. But anyway, so this week, for example, what I'm watching for this month is inflation numbers. I'm looking for FOMC, which is important because we have 3 more meetings or 3 more interest rate decisions this coming year. We have one in September, we have the next one in October, we have the last one, we'll skip November, then we have the last one in December, because FOMC meetings don't tend to be monthly. It tends to have 8 times in a month, so there are 4 months in a year where we tend not to have interest rate policies being released, okay. So you can see next week we have a lot of monetary policy, we have CPI, inflation numbers, we have all those things. So I normally come here, start of the month, just look at from the start of the month to the end, what are the major news I want to pay attention to, depending on the markets you trade. So for me, for example, markets like Euro interest rates don't affect me, but I still tend to watch those markets. I'm not ignorant to say, okay, let it do whatever it wants to do. No, I pay a lot of attention to it. For example, so like this coming Thursday, we have that happening, okay. This coming Thursday on the 11th. So pay attention to those things, CPI, Canada, US. So you can also filter which markets you want to look at, but I like still looking at all markets. I don't, just because I trade the US market doesn't mean I don't want to pay attention to it, but I want to pay attention to the Federal Reserve interest rates this month, because it is highly going to affect the markets I trade, the indices market and the gold market I trade. If you look at the gold market right now, it's trading at all times high. It's above 3,600. It's at actually at 36.50 and even soaring much higher. So you want to see what is intended to happen when the interest rates come out. You can see the forecast already is a lot of people are expecting the interest rates to be lowered in the month of September. I have other websites I use to get the probability of what people think, actual data, where people think or people put money on the table to get to know what if the interest rates are going to be increased or reduced. And so far it has had a very high success rate, but I'll explain that on Thursday. If you come for the webinar on Thursday, I'm going to explain more about that. So we have a 25 basis points projection decrease for this month, which is going to affect a lot of rebalancing of books, affect the markets, and that's why September tends to have a lot of volatility. If you look at data wise, September has had the most volatile bear markets. 9/11 happened in September. 2008 financial crisis started in September. So September tends to have those worst triggers in the markets because of those rebalancing of books. And people are very skeptical because they've just come back from a holiday. And I've talked more about this in the video that's coming out next week. So be sure to watch it, sir. So use that. Most of you are different, so I won't talk specifically about what I'm waiting for, but that's what I'm looking at on the data wise. So coming to gold, I don't have anything much. Remember, I'm normally looking for bearish corrections, so I'm normally looking for a bullish market. I tend to do that on a daily market. I tend to use moving averages as well, the 50-day and the 200 moving average. Okay, so the 50 I use the EMA, the 200 I use the smooth moving average to look at the markets. You can see the gold market is heavily on a bullish market after having this strong consolidation for quite some time, and most recently you can see this market is soaring higher. I've not had any position on gold for some time because I have not gotten that opportunity to trade, because at the same time, remember, September markets are volatile. You have to wait for a good high probability trade. Do not just take a trade. Wait for high probability. And you tend to see a lot of people losing a lot of money. But gold has tended to continue being bullish as we started the early year. You remember we started the year down here, and markets have just been, we were actually trading at around January 1st. Markets were trading around 26.40, and now we're trading at 36.40, 36.50. That's about a 10,000 pip move, which is a big percent. Okay, percentage wise, market has gained over 40%, nearly 40% this year. So people who had position in gold have reaped quite a lot. 40% is not an easy return in the financial market. So that's quite a good return. So I don't have anything on this 4 hour. Remember, I'm normally looking for bullish markets. This is a good bullish market. I'll get a bearish correction in the form of the pattern that I normally trade. I haven't seen that. You can see this market has just been soaring. So without that, I don't force markets into anything. Okay, US 30, US 100, and US 500 sort of had an trade indication last week. Okay, so if I look at this on the daily chart, so I come here to use the daily chart to look at moving averages. Quite good. Markets had that break of all-time highs. So we had this break here. You see this bullish candlestick here. If I bring this here, there we go. We had that strong breakout and retest of that key level. Now, last week I was looking for that retest and an entry. It was a very good trade position, but I didn't get a good entry. So if you look at this, you see this strong bullish candle was a good indication that market has broken a significant level. And I keep talking and telling you guys this a lot. I've not done a market analysis for some time, but if you know, I tend to stress on this a lot. Strong key levels tend to have strong rejections as well as strong breakouts. Okay, now if you look at this, and I'll use this as an example, look at this first touch, second touch, we had a double top. Markets came again, we had sort of like a triple top, and markets got a bearish correction just to get support at the moving averages, and that's why I use moving averages. Markets came down, markets came again just to get that rejection yet again, but markets this time didn't go far. Then we had this strong bullish break, okay, into all-time highs. Now after this strong bullish break, I wanted to look for a correction, and that's what I actually got. So if I come here, we actually got this. Let's go to the 4 hour. Okay, here. So we actually got this. My flag pattern was quite good, impeccable here. We got that flag pattern correction here on the 4 hour chart, but I didn't get the entry I was looking for because as market spiked, I normally don't have the first move advantage. I normally don't play around with that. We've talked about this first and second. Ken tends to call it a first consequence, second consequence thinking. Anyway, may I call it the first move advantage and second move advantage. I'm never associated in the first move advantage because they tend not to be very strong. The second move advantage, once it's confirmed, tends to have a lot of volume when markets come. So what I was watching here, markets came quite good. I set my alarms. I normally trade with alarms because I'm not normally watching the markets 24/7. So when my alarms spiked around this time, it was a good indication. I wanted to watch markets more. This was on a Tuesday when markets had this during the New York session, and then the next day is when I was paying attention because this first spike, I've traded for some time. This first spike and close here, a lot of people tend to jump into the markets here just for markets not to give a good opportunity, and that's what happened here. If you entered here, you can see markets came below yet again before we got that bullish run. Now what I was waiting for the next day, I was waiting for a confirmation. So I was waiting for a candlestick close like this or a doji at this bottom level, and at least a little spike of the S3 just to get that little, not little, but more confirmation that markets have gotten quite a bottom for that week. Remember, I used the S3, R3 to get overbought and oversold levels. So I was waiting for markets to get to that level, and markets didn't really do that. We got instead a rejection. Markets closed back above here. I'm always waiting for a candlestick close. So you can see we had this bearish, didn't get my entry yet. This bullish close was quite high at that level, okay, and it wasn't giving me a good risk reward ratio. Now my risk reward ratio was here. Now for me, you see here, I was waiting for an entry below here, okay? So if I got a good close here, like a doji, a doji or a pin bar down here, I could have gotten a good risk-reward ratio of about 1:2.5. That's a big difference. But what market was giving me was 1.8, 1.7, thereabout. there. And you can see I don't like squeezing my stop losses too tight just because I've gotten a higher entry. Okay, so for me, putting a stop loss around this level was too tight for me. So if I came and squeezed it like this so that I never take any trade less than a risk reward of 1:2. Never, ever, ever. That's my discipline. That's what I do. And that's what I did with this market, because market was offering me a much less risk reward ratio on that one. So I stood out. I didn't take this trade. And you can see this trade actually worked perfectly well. Hit target. Some of you maybe could have taken this trade. And that's what we want to start doing in our live trading sessions starting next week. So there's a video that will drop that will explain that more. So, okay. So for me, I was looking for much less, but still, patience pays. So still market hasn't pushed into new all-time highs, so markets could still get a bearish move to the downside, and that's why I have this recalibrated, or rather redrawn, just in case markets can get another bearish move just to the bear side for me to get a better entry, giving me a risk reward of 1:2.6 or about 1:3 thereabout. You can see here my stop losses are much better, so that's what I'm waiting for on this one. So I didn't take that first trade, and I'm really waiting for this second trade and see what will happen and if that opportunity will come in for me to get that trade. Same thing, I was looking at US 100. Markets were coming in quite well. You can see this at first. Okay, so I was looking for this bearish. I had my entries around down here. Markets came pretty damn close. Pretty close. I was just waiting for markets to come here. Okay, just a little bit lower for me to get an entry to push these markets, or to go with these markets much higher, giving me a very good risk reward of about 3.4. But that didn't happen, and that's why I've recalibrated this. I have this as now my turning point. If market doesn't break to new highs, that level holds. I'm looking for that, and this is my lower boundary. I'm looking for markets to get a 78.6% correction using the Fibonacci from this low to this high, that correction to come here for me to get that trade entry to give me a risk reward of about 1:3 percent risk reward ratio. So that's what I'm watching for on this one. So if my thesis actually works, September tends to have a bearish market, then I'll be looking for those entries towards the end of September or early October to take those bullish trades to the higher side. So might not have a trade in September, but I believe I might if markets tend to get that fall, because sometimes you get to have those strong bearish closes. Like I saw on GBP USD, I was just scanning the markets and I got to see this. You see here, okay, this was a very good trade entry to go long. If you do this, okay, it was a good flag pattern if in my eyes. Okay, market was at S3, which is impeccable. If markets are moving to the upside and you get the markets correcting to S3 within the flag pattern, this is a very good entry signal. And you can see this is something similar I was waiting for. You see this pin bar? Okay, so you can see here, first move advantage. Market just came down. We had this bearish and this close. You see this strong bearish move. If you just entered here, okay, that's what I'm talking about, the first mover disadvantage. If you enter there, very good trade setup, giving a risk reward of 2.6. But look at that. Just because market came and touched that level doesn't mean you should enter. You should always wait for much further. And this comes with experience. So the next day, same thing happened. Markets moved to the lower side, tried to move up, then came down. Then we got now this confirmation, this wonderful bullish confirmation. Okay, if you want to extend your stop loss a bit lower, still giving you a risk reward of 1:2. It's a much less risk reward, but a much safer risk reward. And your targets could have been hit by today. Okay, that was a very good trade setup. And you can see this bearish. You can see how it took so much time to move to the upside, but just 2 candlesticks to take it down to the downside. So that's what I was showing an example here. Markets could be here right now, but you can just take 1 or 2 candlesticks for markets to come back down here. So that's what I'm looking for. That's what I'm waiting for. And once market comes to those levels, I'm patient enough to look for certain entry criteria before I take that trade. And I hope you can learn from that and also practice that with the rest of the other currencies and pairs that you normally trade. And the US 500, similar thing, but I want to talk more about this if you come for the Thursday webinar. I also want to show you a few things on oil. Okay, what I've been looking at on oil, it's been showing quite some good moves to the downside, bearish pattern, and I'll show you extensively what I'm looking at on that, and I can answer more questions on what you guys think about on other pairs, what you're looking for. Maybe you trade currencies, Aussie dollar, USD card, I can take a look at them and just give you a brief breakdown, a market analysis of those markets and what I'm looking for. But in hindsight, that's what I'm looking at. The pairs that I'm watching, the BTC also, I'm watching those markets. We can talk more about it on Thursday. So Thursday we'll do much more extensive session and all that. So I hope you've enjoyed this video. Hope you've learned a thing or two, and make sure to watch our video that is coming that will be explaining about the live trading session, because that will be different from the Thursday. And the live trading session is a private membership group which all of you can easily have access to. There's nothing hard about it, but we'll be explaining that in the next video that will be dropping this week. So hope you've enjoyed that. I'll see you guys in the Thursday webinar class, and I look forward to seeing you all there. The link is below, so be sure to have it, save it, and put a reminder so that when we start the session you'll be there and ready with us. So hope you've enjoyed that, and I'll see you in the next video. Peace.